There's really three ways to get money, take money from the people, and that's what government does in order to have public purposes, and you're required, I'm sure, under Missouri's to spend money for public purposes. Big argument about what a public purpose is or isn't. It's all fair game. Some people have different ideas, but at any event, tax money has to be spent for public purposes. You can basically, aside from fees, user fees primarily, user fees will not raise that much money when you get right down to it. Three ways to fund government. You can tax what people receive. You can tax what people give out or spend, or you can tax what people have. Or you may have a combination of the three, and most states do. I assume Missouri has a balanced budget requirement. Most states do. And what that means varies in every state. It's supposed to be balanced, but by the way I suspect everybody in this room believes it's not. You can either raise revenue, you can cut expenses, you can borrow money, you can use reserves, or you can have accounting methods or lie.
Creative accounting.
That's creative, but that's maybe what you say in Missouri, but we're playing down here. I just call it lying. And all of them actually have a place. I'm not being facetious about this, and we can talk about how they can be put together. And you know, when we talk about how to fund the government, you've got the taxes on what you earn, and in Tennessee we have the so-called Hall's income tax, which is a tax on dividends and interest, and does not raise that much money. We could abolish that, and I'm very much in favor of that for economic development purposes. It's 6% tax on income and dividends. We also have the so-called franchise excise tax, which is basically a corporate income tax. It does raise some money. We have a sales tax, and that is the primary driver for the state. And it is a tax on consumption. And it produces well over 60%, but 65% of our revenue, depends upon year to year. It is a fairly broad-based tax on tangibles, you know, things you can grab. It is not a broad-based tax on things you can't grab, intangibles, services. It is 7% to the state, and then the local government can charge up to 2 3/4, the so-called local option. If it were broad-based, it could drop to well over half of that if it covered everything. And you have all the political consequences of, well, are you really going to tax oxygen? Are you really going to tax whatever special interest is involved? I don't want to pay a tax on whatever it may happen to be. But if you don't, but if you tax everything except items that are sold for resale, and that's an exemption you really need to have. You really need to have that exemption. You can cut the tax to, you know, to 3 or 4%, and that is a clear tax on consumption. We do not have a statewide property tax in Tennessee. Our property tax is a tax, it's a local tax, and it's purely local folks set the rates, and it's the primary funding for our school systems. First of all is that whatever plan you come up with, I believe should be consumption-based revenue. And it can be like Washington or like Tennessee, but it ought to be consumption-based tax. And there are all sorts of reasons for it. And Missouri is a place to prosper, and you want to help people have a great future, and the way to do it is not to impede growth and opportunity. And that's your underlying message is opportunity. The Opportunity Society and the Growth Society and, you know, Have a Future in Missouri is just so powerful an argument. Part of it, and you know, you definitely would like to have the same standards for the sales tax for the counties as you do for the state, because otherwise you'll have an administrative nightmare.
When you got rid of the income tax here in Tennessee, what was the circumstances that brought that about? Were you?
We've never really had an income tax in Tennessee. Now, I drafted one, but we never did.
Can I ask, you said you had drafted a sale or a income tax. Why did you draft an income tax?
I'll tell you exactly why I did.
Well, I mean, if this is working, why are you looking at alternatives?
I guarantee you I wasn't.
Okay. Somebody told you were directed to.
I was deputy governor,
Okay.
and I told him it was the stupidest damn thing I've ever heard of in my life.
Okay.
And he told me to do it.
Okay.
And I had a choice of resigning or doing it. And I kind of wish I'd resigned, but I didn't.
So since Tennessee has the highest sales tax of any of their neighboring states, do you see, I'm sure that there's some bleed to the borders of people shopping, but is it a significant problem?
That issue is raised a lot, and the so-called leakage effect is what you're talking about. Is generally believed to be about 1% of the sales for each point in sales tax. There is some leakage, and there is a leakage effect. There's no question about it. Our experience is the clearest place we have an experience with this is in the Virginia line, Tennessee, Virginia, right on the you know, you got a common border, and in fact we have merchants, you know, on one side of the street, and yeah, you know, it's pretty clearly. And Virginia does not have a tax on food. So you would think that there would be an enormous leakage of people grocery shopping. That's not the case. Simply not the case. I think the real problem you're going to have with leakage is people talking about it and not the loss of revenue. I think it's fair to say that Tennessee, and we'll have to check, but probably also New Hampshire, South Dakota, Texas, Alaska, came through the last economic downturn far, far better than the states that were income tax based, and much better than the states that relied heavily on extraordinary income base like stock options, capital gains. I think that those states did far, far better, and in Tennessee, we, like everybody else, had our difficulties, but nothing like we've seen in the rest of the country. And we have a much more stable tax base than most other states, and we don't have the kicks, the up kicks that you have with economic expansion, but we have a stable tax that's much more predictable, and we're able to notice the downturns quicker because you get the monthly reports on the sales tax that are good. So as far as stability of government, there's no question in my mind that our system is better. Before 1932,
or even when my father was growing up in rural Tennessee, parts of Tennessee were some of the least developed portions, not of the United States, but of the Western civilization. And the Tennessee Valley Authority was instrumental in moving us out of, I don't want to say the Stone Age, but out of the agricultural society.